Good morning, my dear friend. Welcome to the program Gyan Se Kalyan. Myself, Dr. Baidyanath Ram Prajapati, Associate Professor. We are discussing accounting basic. This is very important. And with the help of various terms used in accounting and with the help of small questions and answers, we are going to understand the various accounting principles as well as the various questions which are very relevant to understand accounting. So this is very important for all accounting professionals as well as practitioner and learner and student for class 11, 12, BCom, MCom, MBA, CA, CS, ICWA, and so on. If a layman can also understand with the help of these all small question answers. So here some of the major concept and conventions and principles. So my dear friend, we all know without principles our life is useless. Like Mahatma Gandhi have his own principle, that is Satya and Ahimsa. Likewise, in every field of learning, not only in accounting, they have their own principles. So like here we are going to discuss the principles. The principles are nothing but these are the basic guidelines, rules, method, and the various postulates which guide us for preparation of accounting. So here some of the lists are provided like relevance, reliability, matching concept, timeliness, neutrality, faithful representation, prudence, completeness, single economic entity concept, money measurement concept, comparability, understandability, materiality, going concern, accrual, business entity, substance over form, realization complex, and dual aspect concept. So we will discuss it one by one. We have already discussed in our previous slides. Now the question is, what is accounts payable? So my dear friend, in business, when we are selling the goods on credit, there are bill receivable, and when we are purchasing goods on credit, so from where we have bought, the sum total of the person is known as account payable. What is acid test ratio and current ratio? Very important questions. This ratio compares the amount of cash plus marketable securities plus account receivable to the amount of current liability. So acid test ratio is equal to current assets over current liability. Likewise, current ratio is equal to current assets divided by current liability. So the ratio is nothing but it is the very important controlling tool in case of business operation. We are using these tools like a thermometer in the human body. We are measuring our temperature, whether this is normal, abnormal, up or down. So like if a ratio is more than the standard and less than the standard, then it signifies that the business operation is not going in a right direction. So ratio is compared with their relevant items like gross profit ratio. Gross profit divided by sale into 100. So this gives us how much profit, gross profit we have earned by selling the goods. Next question, allowance for doubtful accounts. So my dear friend, we all know we are selling the goods on credit, not only on cash. But when we have sold the goods on credit, the party some of the party may not give the amount. So for that, we are creating a reserve, or we are making allowance or provision for bad debts. That is called allowance for doubtful accounts. So next here, very important, that is related to our accounting principle. What is generally accepted accounting principles? In order to maintain uniformity and consistency, and this is two important things in our accounting practices. The accounting information must be uniform, and this must be consistent so that the person can compare with other entity or outside entity, inter-company comparison, intra-company comparison can be made easily. So the basic rules which governs the different method, practices, that is called generally accepted accounting principles. These rules are called by different names such as principle, concept, convention, postulates, assumptions, and modifying principles. Next questions, what is concept and conventions? This term concept refers to the necessary assumptions and ideas which are fundamental to accounting practices. The conventions connotes and denotes customs or traditions as guide to the preparation of accounting statement. My dear friend, there is a destination where we have to reach when we are moving on the road. So for walking, there is a system that we must move on our left hand side, not on the right hand side if there is one way road. Likewise, the destination of the accounting is to present true and fair view of accounting information and accounting position and its performance. So to present the correct view of the performance as well as position, this must be followed. So, as we have discussed, the basic account concept, the business entity concept, money measurement concept, going concern concept, accounting period, dual aspect, revenue recognition, matching, full disclosure, consistency, conservative, materiality, and objective. So, my dear friend, we can divide the all principles of accounting in two parts, that is the concept and conventions. So the concept are very important as well as conventions. So next question, what is system of accounting? So my dear friend, there are basically two systems, double entry system and single entry system. Single entry system is an incomplete system of maintaining record of financial transactions. It does not record two full effect. There is no debit and credit for every transaction. Only personal account and cash book are maintained under this system. Next system is double entry system where complete record is maintained. The rule of debit credits are followed, and dual aspect gives us the basic equation, that is accounting equations, where debit always equal to credit and assets is equal to capital plus liability. Every transaction has two effects, receiving of the benefit and giving of benefit of. For each transaction, every debit must have corresponding credit. So this is called double entry system. So there are two bases of accounting, that is the cash basis and accrual basis. Under the cash basis of accounting, only the cash transactions which is received or paid is recorded, but when it's become due is not recorded. under the accrual basis, whether is it received or not received, paid or not paid, when the event has happened, that will be recorded. What are accounting standards? Like accounting principles, accounting standards are very important. These are written policy document covering the aspect of recognition, measurement, treatment, presentation, and disclosure of accounting transactions. So, in every country, there is an accounting body. In our India, here, the Institute of Chartered Accountants of India, a professional body, is responsible for developing the accounting standard. So, applicability of accounting standard is applied to sole proprietor unit, partnership, firm, society, trust, HUF, that is Hindu Undivided Family, association of person, cooperative society, company. The another is international financial reporting system is also following this accounting standard. There have been vast changes in the global economic scenario with the emergence of globalization, liberalization, and privatization. So this accounting standard is very important to maintain the similarity and comparability all over the world. Accounting standard is seeking momentum for international financial reporting. So next question is, what is goods and service tax? So in our India, now we are following one country, one tax. So GST is a destination based tax, consumption of goods and services. It is proposed to be levied at all stages, right from manufacture up to financial consumption, with credit of taxes paid at previous stage available as set up. There are three main components, that is goods and service tax, central goods and service tax, that is GST, state goods and service tax, that is SGST, and interstate goods and service tax, that is IGST. CST means central goods and service tax. SGST means state goods and service tax. A collection of SGST is the revenue of the state government. IGST means integrated goods and service tax. Revenue collected under IGST is divided between central and state government as per the rates specified by the government. Very important question. What are the characteristics of goods and service tax? GST is a common law and procedure throughout the country under single administration. GST is destination based tax and levied at a single point at the time of consumption of goods and services by end consumer. GST is comprehensive levy and collection on both goods and services at the same rate, with benefit of input tax credit or subtraction of value. Minimum number of rates of tax does not exceed two. There is two scope of levy of cess, resale tax, additional tax, turnover tax. There is no multiple levy of tax on goods and services such as sale tax, entry tax, octroi entertainment tax. This was earlier. Here, my dear friend, a small question is provided for the benefit of understanding. So you try, somewhere answer is provided, you check it. So explain advantages of GST. GST has resulted in the abolition of multiple types of taxes in goods and services. GST widened the tax base and increased revenue to the center and state, reducing administrative cost for the government. It has also reduced compliance cost and increased voluntary compliance. GST has affected rates for tax to maximum 2 floor rates. GST has removed the cascading effect of taxation. GST will result in enhancing manufacturing and distribution system. It will eventually promote economic efficiency and sustainable long-term economic growth. GST helped to extend competitive edge in the international market for goods and services produced in the country, leading the increased exports. So, next question. What are basic accounting concepts? Explain briefly. Now we are going to explain briefly all the accounting principle as we have discussed. Going concern, it means the company will go forever. The business firm would continue to carry out its operation indefinitely. The businessman does not know his business when it will be closed or liquidated. So, the assumption is the business will not be closed in near foreseeable future. This is very important concept. So, we are dividing all the expenditure in two parts, that is capital and revenue. The capital expenditure are those expenditure which will go with the business as long as it will go, like land, building, plant and machinery, which are not meant for resale purposes. Next, business entity concept, very important. Under this concept, this business is different from the owner and separate entity from its owner. Purpose of accounting, business and owner are to be treated as two separate entities. We are recording all the transactions in the books of the business, not in the books of the owner. Next, money measurement. All the transactions which are measurable in terms of money are recorded in the books, and not which are not measurable, like loss due to death of the owner and efficiency and inefficiency of the manager. What is accounting period? So as we have discussed, whole of the business life is divided in different unit and segment, so that we can prepare account and we can measure the progress of the business, say like 12 months. It may start from the April and may end on March. So 12 months is known as accounting period. What is cost concept? All assets are recorded in books of account at their cost price, which include cost of acquisition, transportation, installation, making assets ready to use. Another is dual aspect concept. It gives us very important equation that is called accounting equation, that is assets is equal to liability plus capital. So it states that every transaction has a dual or twofold effect on various accounts and should therefore record at two places, that is debit and credit. Revenue recognition, this concept recognition, it requires that the revenue for the business transaction should be considered or realized when a legal right to receive arises. Revenue is a gross inflow of cash arising from the sale of goods and services by the enterprises by the other party. Other is matching concept. The concept of matching emphasizes that expenses incurred in accounting period should be matched with the revenue during that period. That the revenue and expenses incurred to earn this revenue must belong to the same accounting period. So here, what is full disclosure? All material and relevant facts concerning financial performance of an enterprise must be fully and completely disclosed by giving footnotes. What is consistency? So the accounting policy, methods, treatment should be consistent over the year. It should not be changed so frequently so that comparatively may be made. Accounting principles are consistently being applied by different enterprises for the period under comparison for the same firm for a number of periods. Conservative. Here is conservative means important. Whatever important should be recorded and what is not important should not be recorded. So conservative means future losses will be recorded but future profit will not be recorded. Material means important. So all the material facts, if the item is likely to influence the decision of a reasonable prudent investor or creditor, it should be regarded as material and shown in the financial statement. So my dear friend, if the decision of the user of the accounting information changes, so under that situation any item will be called material. Either it will be treated as unit wise or maybe as a group wise. Objectivity. Accounting transactions should be recorded in the manner so that it free from the bias of accountant and other. So we have discussed what is accounting standard. These are the written statement of uniform accounting rules and guidelines in practice for preparing the uniform and consistent financial statement. This standard cannot override the provision of applicable laws, customs, usage, and business environment in the country. What is journal entry? Very, very important. Journal entries are the first steps in accounting cycle and are used to record all business transactions and events in accounting system. What is expenses? Expenses are costs incurred to generate revenue. What is double entry accounting? So double entry accounting is also called double entry bookkeeping, is the accounting system that required every business transaction or event should be recorded twice. There are two accounts, that is debit or credit, giving and taking. This is the same concept behind accounting equation. Every debit must be matched with the credit. What is operating expenses? It includes all costs that are incurred to generate operating revenue like sales. Examples are rent, business that cannot afford to purchase space to operate usually rent space for another company. Wages, advertising. So these all are the operating expenses. Now we are coming to non-operating expenses. It includes that cannot be linked with operating revenues like interest expenses are the common example. Another is what is revenue account. So revenue are assets earned by a company by operation and activity. In other words, revenue includes the cash or receivable received by a company for sale of goods and services. Here example are sales, rent received, consulting services, etc. Now we are coming to the last part of our slide, that is non-operating revenue and other income. Here the examples are interest incomes. What is accounting equation? Very important. Assets is equal to capital plus liability. This forms foundation of all accounting system. In fact, the entire double entry accounting concept is based on the basic accounting equation. This simple equation illustrates two facts of account about a company, what it's owed and what is owed. Thank you very much. Enjoy accounting.